Hello and welcome to Business Incorporated. I'm Will Ibong. Now let's check in on the markets and let's kick off with major stocks where in Africa where sentiments were mixed at intraday. Nigeria and South Africa traded in opposite directions. The NGX was up almost 1/3%, while South Africa's GSC was down 0.17%, traded lower at intraday. Now Egypt's EGX 30 is still closed for the Muslim holiday, while Kenya closed Monday's session in the green. Now we move over to the Middle East, where most major equities markets were mostly in the red at intraday. The Abu Dhabi index was down 0.10%. Dubai was also down 0.11%. Now still within the region, we see the Saudi closing 0.07% up, while the Qatari index is still closed for the Eid holidays. Now, European leaders met for North Sea Summit to discuss the future of Europe's energy supply. Lars Alter is with Deutsche Welle and joins me from Berlin. Lars, it's rare that a summit will be held on a ship at sea. Tell us more.
Yes, thanks for having me. Indeed, it was an unusual place for a meeting. The Connector is a giant ship with 2 cranes. One of them lifts up to 400 tons, and it can operate 3,000 meters below sea level. It is used, for example, to lay cable, especially cables connecting offshore wind parks. And such cables are laid all across the North Sea right now because there is a big plan in the works. The North Sea is expected to host the world's largest network of wind parks. It's set to generate 300 gigawatts of power by 2050. That's as much as 300 nuclear plants would provide. And it's a joint project by all the North Sea neighbors. There will be Germany, France, the UK and Ireland, Norway, Belgium, Netherlands, Luxembourg and Denmark.
Now, experts say that offshore wind energy would be a game changer for Europe. Why is that?
Well, it's long been known that offshore wind energy is huge, simply because of the wind forces out there. Offshore wind can power the biggest turbines that can be built, and that generates a lot of power, of course. Now, what makes the North Sea the ideal spot for it? It's relatively shallow as oceans go, so it's relatively easy to build and anchor those turbines. Also, no spot in the North Sea is more than 300 kilometers away from the mainland. So laying cable, using the ships that I just described earlier, is much easier than elsewhere. What's also interesting, lots of the neighboring countries' industrial areas, which use a lot of energy, are somewhat close to the shore. Again, that makes for shorter distances for power transmission. All this, of course, is not entirely new. The North Sea is already home to many wind turbines, and energy companies have long been aware of the benefits of investing there. However, this joint commitment by all the countries is taking it up a notch.
So what are investors looking at in today's markets?
Lots of numbers mostly. Most of them will actually come from the other side of the ocean. Some of the world's biggest tech firms are due to present their quarterly reports, among them Alphabet and Microsoft later today, and then Amazon and Meta later in the week. But there's also some quarterly numbers out of Switzerland. Banking giant UBS has seen its profit drop by over half, but it's due to higher expenses related to some legacy litigation in the US. The bank is still working through its involvement with mortgage-backed securities there. Meanwhile, the core business for UBS is strong, and the company is set to complete its takeover of failing competitor Credit Suisse over the next few weeks.
Thanks, Lars, for that update. Now let's cross over to the UK now, and with millions starting to receive £301 support payment today, it's starting to put a dent on public borrowing. But let's talk to Juliana in London. Good afternoon, Juliana. UK public sector borrowing has jumped to a record high in March, and UK Chancellor Jeremy Hunt is blaming pandemic and energy bill support for the hike. This is no surprise, is it?
I don't think it is a surprise. Good afternoon, Will. And you're absolutely right. It is because of the eye-watering sums that the UK government, basically the public, because of course it's not coming from the government's purse, it's coming from taxpayers, and that's us. Over the past couple of years, the government have put billions of pounds into making sure the economy stays afloat. This was during the pandemic with the furlough scheme, and then of course we had Putin's energy war, and the government have had to, put this energy price guarantee in place at £2,500 a year, and it costs a lot of money. You referred to that 301 cost of living payment, which millions of households will be receiving from today. That's not just one payment, that's the first of 3 payment instalments. So expect public sector borrowing not to fall anytime soon. So last year, public sector borrowing came in at about £140 billion, pretty high, but much lower than what economists in the city had anticipated. In fact, I think that's about £20 billion shorter than that. And that's because of tax receipts. We know the cost of borrowing is at a record high at the moment. Interest rates are at about 4.25%. So the tax receipts that the government have been getting in from the public are really laying down the net borrowing. But I think the crucial information from the data received this morning from the Office for Budget Responsibility is Britain's overall debt, which currently stands, let me make sure I get this right, at £2.53 trillion. That is an eye-watering amount of money that the government basically owes itself. In fact, it's almost 98% of Britain's overall GDP, which is one of the reasons why Jeremy Hunt, the Chancellor, seen as a statesman, a steady pair of hands, was brought in so swiftly after the Liz Truss economics, because the market meltdown wasn't just about some of the tax cuts that Kwasi Kwarteng, the Chancellor at the time, was trying to put through. It was about debt. And, one of the 5 key priorities for this administration at the beginning of the year was to bring down public debt. And we've got this data showing that it's at 98% of GDP, which is pretty worrying, considering that growth is stagnating at the moment. As we said, we've heard from the Chancellor, he's reacted to this data, basically saying that we're still on track, that we still do, of course, have to support the most vulnerable in society, particularly businesses that are going through a pretty difficult time in the UK at the moment. Mixed bag. But the fact that last year's overall debt was about £20 billion less than economists had priced in, it does show that just ahead of a general election, that the Chancellor and the Prime Minister have a little bit of wriggle room to try and cut taxes to appease Conservative voters.
And that's quite a huge sum there, £2.53 trillion you mentioned, Juliana, and trying to cut taxes, we'll see how that goes, for especially this time when government needs all the money that they can get. Well, we're seeing grocery stores and Aldi, Lidl, both hit new record market shares over the last 12 weeks. It looks like many more households in the UK are now turning to these discount stores.
Absolutely, you're absolutely right. I think, during the cost of living crisis, especially with, grocery prices at a 45-year high, the biggest beneficiary of the cost of living crisis in the UK has been discount retailers, which is why we're not surprised that Kantar, which is a retail analytical group, have shown that in the 16 weeks to the end of March, both Aldi and Lidl have been able to increase their market share. The big four still remain, Tesco being the biggest, then Sainsbury's, then Aldi, then Morrison's. But slowly we are starting to see these European stores creep in on their market share. And that's because it is very expensive. And I think a lot of people before the pandemic associated a lot of, their food with the brands. They wanted that Tesco bag. They wanted that Sainsbury's bag. Not anymore. Not if the food tastes the same from Lidl and Aldi, and it costs you so much less. So that's exactly what we are seeing. We're seeing that sales in Aldi, I believe they creeped up about 25%. So, they're doing a 25% better year on year. Similar results we're seeing from Lidl. In fact, I covered a story on Monday where a high court in London actually ruled that Tesco has to pay Lidl a significant amount of money because they've got this club card price. So anyone watching in the the UK will be familiar with that big yellow sticker that Tesco stick on items to show that it's cheap and competitive. But a judge ruled that Tesco had actually basically stolen the idea from Lidl and their big yellow sign. So it is very, very competitive in the UK at the moment. There is a price war going on. So I think the big established stores in the UK know that they're going to have to reduce their costs if they want to keep customers, because with inflation going nowhere soon, I think most people, if you're not going to the market to get your meat, then you're probably going to one of the discount retailers so you can save a couple of pounds.
I'm kind of laughing at the price war going on there. And you're totally right. There's no difference between the taste of Sainsbury, food you buy from Sainsbury or Lidl or Aldi, as in I, for one, know that. So right now, discount stores are the thing, and people need to save, the coins they've got in their pockets. Yeah. So how are markets doing at intraday?
Absolutely. Not great, actually. The FTSE All shares very much in the red at intraday. We've had a slew of economic updates. I think the markets have definitely been a bit concerned about the announcement from Ocado this morning that 2,300 jobs are potentially at risk because they've decided to shut down their oldest warehouse due to logistical issues. It was actually a joint partnership with Marks and Spencer, but they think they can do it much faster and much cheaper at another site. So really concerned about those job losses there. But at intraday, the all share is down. It's down by 0.33%. FTSE 100 down too by 0.32%. And the FTSE 250, that domestic market, that's also down by a third at intraday. In the currencies market, the British pound also down on the US dollar by 0.20%, but it's trading up against the euro by just a smidgen at 0.06%. But the British pound at intraday is down on the Japanese yen by 0.31%, Will.
Quite a bearish day in the UK markets, Juliana. Thanks so much for the updates.
Yeah.
Now, Hong Kong's markets led losses in Asia on Tuesday, with the Hang Seng sliding 1.71% as Asian stocks largely fell ahead of earnings from big tech firms. The Hang Seng Tech Index saw a larger loss, tumbling 4% as technology stocks led losses on the HSI. Alphabet, Microsoft, Amazon and Meta are among the high-interest names scheduled to announce their results for the first quarter. Mainland Chinese markets also finished lower, with the Shenzhen component 1.48% down to close at 11,149, and the Shanghai composite ending 0.32% lower. South Korea's Kospi slid 1.37% to close. And in contrast, we saw Japanese markets were all higher, with the Nikkei 225 up 0.09% to end the day. Markets in Australia are closed for a holiday. Now, U.S. stock futures were lower as traders await corporate earnings announcements from several big tech companies and consumer discretionary names, as well as new economic data. Dow Jones Industrial Average futures were down 0.39%. NASDAQ, S&P 500 futures also inched down 0.47% and 0.36% each. In other notable after-hours action, shares of First Republic Bank also slid about 20%. Deposits tumbled 40% to $104.5 billion in the first quarter. Alphabet and Microsoft will be on the mind of investors as both tech giants will post their quarterly results after the close on Tuesday. Now, oil prices slipped in early trade on Tuesday, paring gains from the previous session as investors weighed strong holiday travel in China that could boost fuel demand with the prospect of rising interest rates, elsewhere slowing economic growth. Now, Brent Crude fell 7 cents to $82.66 a barrel, while U.S. West Texas Intermediate crude eased 6 cents to $78.70 a barrel. Oil futures rose more than 1% on Monday on optimism that holiday travel in China would increase demand in the world's largest oil importer. Investors await industry data on U.S. oil stockpiles due on Wednesday, with analysts expecting to see a drop. Now, for the commodities update, we're keeping an eye on diesel, which is a major source of energy for transportation and logistics services, and is also used for power generation. In the past 6 months in Nigeria, the price of diesel increased consistently amid rising global energy prices. However, diesel price has now declined to a 12-month low of 640 naira per litre from about 800 naira per litre at the start of the year. What is the reason for this? Daniela Omubodede joins me from Financial Derivatives Company. Good afternoon, Daniela. It's good to have you on the program. But what is the implication of this on the Nigerian economy, of this drop in diesel price?
Good afternoon. Thank you for having me. So first of all, we have to note that there are 3 key factors that affect the price of diesel, which is the crude oil price, demand, as well as exchange rates. So the price of oil accounts for at least 40% of diesel prices. And in the past 2 weeks, we've seen oil price drop from about $97 per barrel to from about $87 per barrel to $83 per barrel. So diesel price is most likely going to follow that downward trend. And also, due to the lack of refining capacity in Nigeria, our domestic diesel price is largely going to be affected by the global market, as well as exchange rate pass-through as we import diesel. If we're importing diesel to be cheaper, therefore the price of diesel domestically will be cheaper. So with these lower prices, it would reduce the cost of production for producers and manufacturers because they use diesel to generate power for their production operations. So therefore, with a lower cost of production, we're most likely going to see an increase in profits and revenues for these producers and manufacturers.
That's good news for the manufacturing, the real sector in the economy. But now, you mentioned it is a key factor for production. There's also a key stoking factor of inflation, which currently has increased to 22.04% in the last reading from the NBS, that's National Bureau of Statistics, from 21.82% we saw in January, February this year. Now, given the recent sharp decline in the price of diesel, are we likely to see a moderation in inflation anytime soon?
So we are most likely not going to see a moderation in price of inflation solely because diesel has dropped, because producers are most likely going to pass on a higher cost of production to consumers in form of high prices than for them to pass on lower costs. Let's take a bakery, for example. They use diesel to power their generator sets, for example, for their bakery operations. So when the price of diesel is high, they increase the price of bread that they sell to customers. But they are most likely not going to reduce that price solely because the price of diesel has decreased. So yes, aside from diesel and other energy costs, let's not forget that inflation is also affected by money supply, and then there's still exchange rates and interest rates, which also affect inflation directly and indirectly. And we don't even know if this decline in the price of diesel is just a short-term phenomenon or something that is going to be sustained in the long run.
Okay, now we've seen a transition as the race to net zero is picking up pace in most countries. We're seeing them moving, multiple countries are ramping up, their investments in cleaner energy and, following the pledges, commitments of the last COP27. Now, given this situation, what does this pose for the demand for diesel and its viability still for Nigeria?
So yes, since now most people are switching to other renewable sources of energy, for example, solar, which is very rampant in, especially for us here in Nigeria, due to the fact that in the past few months, diesel prices soared and they were like twice the price they were before the Russia-Ukraine war. You will see that most people started investing in solar energy, which will become beneficial in the long term. So when there's increase in power supply due to from these other renewable energy sources, the demand for diesel as a source of power for power generation is going to decline, and it's going to also affect the viability of diesel. Thank you.
Thanks so much, Daniela Omubodede, analyst with Financial Derivatives Company. Thanks for sharing your insights and perspective on the program.
Thank you.
Moving on to other issues on In Africa, we see South Africa, Botswana and Egypt have been ranked better than Nigeria, and that's according to the latest Global Logistic Performance Index released by the World Bank. The Nigeria Customs Service was rated 90th among the 139 countries behind the South Africa and Benin's counterparts ranked at 31st and 65th positions, respectively. The report comes after 3 years of unprecedented supply chain disruptions during the COVID-19 pandemic with soaring delivery times. The LPI reports tagged Connecting to Compete 2023 Trade Logistics in an Uncertain Global Economy provides a measure of countries' ability to move goods across borders with speed and reliability. Meanwhile, the report adds that the biggest delays observed in the supply chain occur at the seaports, airports, and multimodal facilities. Now, the International Monetary Fund, IMF, has approved the first review of Tanzania's 3-year extended credit facility. In a statement, the bank says it is allowing the immediate disbursement of about $153 million in budgetary support to the East African country. According to the international lender, Tanzania's economic reform program is progressing well in a challenging global economic environment, but authorities should work to boost domestic revenues while stepping up structural reforms to streamline bureaucracy and combat corruption. The decision brings total disbursements under the $1.04 billion loan arrangement approved for Tanzania last year to about $305 million. Now, Zimbabwe needs $100 million worth of gold to kickstart its proposed billion-backed digital currency as the Southern African nation makes another attempt to stabilize the Zimbabwe dollar and boost demand. According to the Central Bank's Monetary Policy Committee, the Apex Bank will rely on gold reserves, which has been accumulating to support the initiative and stem the local currency's volatility. Meanwhile, Zimbabwe's targets a 14% increase in gold production to 40 tons this year. Zimbabwe also introduced gold coins last June as a store of value and to help support the local units. And the plan for gold-backed digital currency was approved by the Monetary Policy Committee last month. Now, international and local artists paint giants colorful murals on the exterior of a 15-story building in Ivory Coast commercial capital called the Pyramid, an architectural gem that fell into disuse 20 years ago. They aim to give the neglected tower a new look. Let's take a look at this.
Embarking on a rehabilitation project to give new life to Ivory Coast Pyramid, a symbol of Ivorian prosperity in the 1970s and one of the first towers built in the central business district of Plateau in Abidjan. This futuristic pyramid-shaped building was neglected for years. The project's Pyramid 2023, Tomorrow is Already Born, aims to give it a second life. Through this initiative, Ivorian Artistic Director Lemon Otto renovates external facades of older buildings like the Pyramid, which was completed in 1973 under the direction of the Italian architect Rinaldo Olivieri.
We are all here to work together. In a way, that was the main objective.
Minister of Construction and Urbanism Bruno Nabagne-Kohn says that the renovation must respect the original architecture of the building since the current structure is in good condition. Architects say many buildings in the business district are internationally known and could teach Ivorians about their own urban history.
Wonderful, interesting developments there. And that's it, a wrap on Business Incorporated today. Do join us tomorrow, same time for another edition. I'm Will Ibong. Thanks for watching.